Okay, guys, so looking at the British pound in today's markets, we are seeing the currency continue to edge higher against the US dollar based on the markets expecting a Brexit deal to be agreed by next week, Monday, is what the headlines are suggesting. So the pound remains in this upward channel, which is very positive for the currency, which is showing you the markets are betting that hopefully the UK and the EU can agree on a trade deal. They have been talking about the pound going up to around 140 against the US dollar. So we do have more upside potential to catch this trade if you haven't already purchased this currency pair already. So we can get a move around 5.5% to the upside. Again, that is a decent return in the markets. However, of course, if the UK and the EU cannot agree on a trade deal and talks break down because of the fisheries and level playing field for business subsidies, if that does become the main stumbling block and a deal can't get agreed, they say the pound could then drop to around 122. That could be a great selling opportunity if that does materialize in the market. So pound keeps creeping higher. Remember, the US dollar does continue to weaken across the board, and that is expected to happen over the next year or so. So again, we would expect the pound to continue to climb anyway, as long as there is a Brexit deal. So we do have an upside bias towards buying the pound against the US dollar if you haven't already entered a long trade in this currency pair. Then we can look at the UK FTSE 100 index. And we know the index had been pushing higher recently. Again, strong gains in the index because, again, if the UK and the European Union can agree on a trade deal, very positive for the UK index because the companies within the UK's economy, the top 100 companies that make up the UK 100 index, they will have tariff-free access to the European market, which does buy 56% of all UK exports. So it's very important that the UK can get a free trade deal with the European Union because they can sell their goods to the EU without being subjected to taxes and tariffs, which could mean that their exports are less competitive to European companies selling the same exports because European consumers will just buy the same goods or services in the EU rather than buy them from the UK that will be subject to taxes and tariffs. So again, we can clearly see why the UK stock market hasn't risen for the past few years. And that is because, again, of the uncertainty around Brexit. So for around 2 years, you can see the UK stock market has literally just traded sideways. It hasn't gone higher at all since 2018. But again, the outlook is becoming more positive. And if they do agree on a trade deal and a vaccine does come out next year, then we could see momentum continue to the upside. So again, we do have a potential buy for the FTSE 100 as well. So let's keep our eyes and ears on the Brexit news. Hopefully a deal can be agreed. It's good for both sides, and that'll be bullish for the pound and the UK index. So you could buy the UK index and you could buy the pound against the US dollar on a positive Brexit deal and a vaccine being rolled out in early 2021. So there we go, guys. That's analysis on the pound. Thank you.